The IRS collects $4.7 trillion a year, but every year, 600 billion disappears. Somebody's not paying, and at each level, the game looks completely different. This isn't financial advice. This is a map of how money hides, from a waiter pocketing tips to a billionaire moving funds through 7 countries before breakfast. Let's start at level 1, the cash economy. This is where 85% of tax evasion happens, and it's exactly as simple as it sounds. A waiter makes $47,000 a year, reports $31,000. That missing $16,000? It never existed on paper. No receipt, no record, just folded 20s in a back pocket. Landscapers, babysitters, handymen. The entire cash economy runs on one agreement. I won't tell if you don't. The IRS estimates $55 billion a year vanishes this way. The risk? Low. The IRS audits less than 1% of returns under $75,000. You're more likely to get struck by lightning than audited for your tips. But when they do catch you, it's usually because someone you trusted talks. Your ex, your business partner, your landlord who noticed you drive a BMW but claimed $30,000 on your taxes. Level 2, the side hustle zone. You sell things on Etsy, you drive for a rideshare app, you flip sneakers, and you deduct everything. Your car is a business expense. Your phone is a business expense. That trip to Miami? You had one meeting, so the whole flight is deductible. Welcome to the gray zone. The IRS calls them hobby losses. You call them legitimate business deductions. The difference? Whether you can keep a straight face during an audit. But then something changes. Your side hustle makes real money, $50,000, $100,000, and suddenly you need something most people don't know exists. Level 3, the LLC game. You create a company. On paper, the company makes the money. On paper, the company has expenses. On paper, you barely make anything at all. Your LLC buys a truck. Your LLC rents an office, which happens to be your spare bedroom. Your LLC takes you to dinner. It's a client meeting. The company pays for your life. Is this legal? Technically, yes, as long as you can prove legitimate business purpose. But the line between optimization and evasion? It's about 1 millimeter thick. Level 4. Now it gets serious. You make $1 million a year. Your tax bill is $370,000, and for the first time, you hire someone whose entire job is to make that number smaller. A good tax attorney costs $15,000 a year, but they save you $150,000. That's a 10-to-1 return. Better than the stock market, better than real estate. They use something called a cost segregation study. They reclassify parts of a building, carpets, fixtures, wiring, as personal property. Depreciated in 5 years instead of 27. Legal, brilliant, invisible. Then there's the real estate loophole. The IRS says buildings lose value over time, so a landlord who makes $200,000 in rent can show a loss on paper. 0 taxes owed. You read that right. A person making $200,000 a year, legally, pays less in taxes than a teacher making $52,000. The code rewards ownership, not labor. But here's where it crosses the line. Level 5, offshore accounts. And no, it's not just movie villains with Swiss bank accounts. It's dentists. It's tech founders. It's your neighbor's dentist. The Cayman Islands has more registered companies than people. 80,000 residents, 100,000 shell companies. Think about those numbers for a second. You set up a company in the Caymans. Your U.S. business pays that company for consulting services. The money leaves America and sits in an account that the IRS can't easily touch. The Panama Papers leaked 11.5 million documents in 2016. 12 current heads of state, 61 family members of prime ministers, and 214,000 shell companies, all hiding money. And the consequences? Almost none. The journalist who broke the story got killed by a car bomb in Malta. The people named in the papers? Most are still in power. Some got promoted. Level 6, the art of legal fiction. This is where tax evasion stops being a crime and starts being a profession. A billionaire buys a painting for $2 million, gets it appraised for $50 million, donates it to his own private museum, writes off $50 million in taxes. Cost to him? $2 million. Savings? $18.5 million. Then there's the charitable remainder trust. You put assets in a trust. The trust pays you income for life. When you die, the rest goes to charity. You get tax deductions now for money that won't be donated for decades. The ultimate move? Die. Seriously, when you die, your heirs get what's called a stepped-up basis. All the capital gains during your lifetime erased, like they never happened, legally. So here's the uncomfortable question. Is any of this fair? The IRS has 78,000 employees, but they haven't been given the tools to audit the rich since 2010. Budget cuts every single year. The average millionaire gets audited once every 16 years. The average minimum wage earner on earned income credit, once every 8. The system audits the poor because it's cheaper. It costs the IRS $150 to audit a low-income return. It costs $20,000 to audit a billionaire. Guess which one they pick when the budget's been slashed. The tax code is 75,000 pages long. Nobody reads it. Nobody understands it. And that's the point. Complexity is a feature, not a bug. It rewards the people who can afford to decode it. So what do you do with this information? You don't evade. You don't cheat, but you stop being naive. You learn the rules so well that the game starts to bend in your direction. Every wealthy person you admire understands taxes better than you. Not because they're smarter, because they treated it like a skill worth learning. You should too. If this video made you look at your taxes differently, even just a little, drop a comment with which level surprised you the most. Subscribe if you want more breakdowns like this. Knowledge isn't just power, it's money.